Now, with the markets closed in Korea, it's time to check out the action here and around the world. And for that, we're joined on the line by Daniel Yoo, global strategist at Kiwoom Securities. Mr. Yoo, thanks for coming on today.
Thanks for having me.
Now, as we just heard, data out today from the BOK saying the economy actually shrank in the first quarter. GDP growth of minus 0.3%. Stocks down today again. What happened here and in other markets?
Yes, if you look at the U.S. market, it's been very strong on Monday. Nasdaq struck a high of closing at above 8,100 level. And also, Chinese market was closing higher yesterday, but today a little bit of corrections. And despite all that, you've seen a Korean market showing a weakness in the past 2 days. Yesterday, Korean market fell more than 1%. Today, it has fallen for Kospi about 0.5%. Kosdaq is down about 0.98%. Clearly, the news of the economic growth shrinking in the first quarter versus the last quarter made this kind of impact. However, though, the growth rate itself is YOY 1.8% compared to the last year, same period. And most likely going into the second half of this year, growth rate will pick up continuously. The reason for the sharp fall, we think, is because of the fixed asset investment falling to the historical low level. It is down by 10.8% year on year. That is a quite significant drop if you think about Korean economy growing somewhere around 2.5% on average. However, though, the fixed asset investment will pick up going into the second half as Samsung and various companies are announcing increase in the fixed asset investment. So the economic growth itself should stabilize around first quarter to second quarter and then pick up around third quarter. That will impact the equity market going forward.
Got it. Well, you mentioned U.S. stocks. They, of course, reached new all-time highs earlier this week, but down the very next day. What's driving that movement and where is it headed?
Sure. Most of the earnings are coming out. We've seen the earnings release are coming in better than expected. However, though, earnings are declining from the last quarter. At the beginning of the year, they were expecting about 4% plus of decline, but actual numbers are coming in at less than 3% decline. That's the reason why the earnings are coming in higher than expected. And that's why the share price has been risen, but nevertheless, valuations become a little bit stretched because earnings are still going down from the previous quarter. So the market fell for Dow 0.22%, Nasdaq was down 0.23%, and S&P was down 0.22%. However, though, the after-hours numbers are coming in very strong. The Microsoft announced the earnings at $1.14 versus forecast of $1, significantly higher. Facebook also announced the $1.89 per share versus $1.61 estimation forecast. So the after-hour, these two stocks are up 4% and 8% respectively. Therefore, we do think that at the end of today, from the U.S. market, Nasdaq will continue to break the record high level in the future.
So we could be looking at another strong open there in a few hours. Now, let's talk about oil prices. They came down after 3 days of gains, setting 6-month highs, perhaps getting over some of the shock after the U.S. announcement from about the Iran sanctions. Where do you see oil prices going forward, and what does that mean for other markets like equities?
Yes. As I've said earlier before, oil prices should settle in the long run. Right now, it is around $65 level. We think that the band has risen slightly, but nevertheless, we think that oil price should remain at some stable level around $60 to $65 level. The main reason for that is because of the shale gas production increase that we've seen throughout the last several years, and also Saudi Arabia and UAE have promised to increase the production increase. As for Korea, because they import around 10% of total oil from Iran, that could have been very negative news for the Korean market, but Saudi Arabia promised that they will substitute for the Iran oil. So in terms of cost increase, we think that it's not going to be that significant. One thing that we have to watch out is the shale gas revolution, and that is here to stay. which means that much lower oil price generations going forward in a much longer term period. This will reduce the overall cost of factors, and that's the reason why the U.S. is increasing their production capacities and getting in more foreign investment coming into the country, and the economic growth rate rising a little bit more in terms of the future growth. So all that being said, we don't think that oil price is going to go up higher. We think that oil prices should remain at around $60 to $65 level in the future.
Okay. Got it, Mr. Yoo. We'll have to leave it there, though. Thanks so much for coming on today.
Thank you very much for having me.